New technologies often face skepticism before clarity emerges. The internet did, digital assets did, now crypto assets are part of that discussion. Hi, I'm Vinayak Magotra, and welcome to Centricity Founders Speaks. This conversation isn't about belief or hype. It's about understanding what's changing and what remains uncertain. For many participants, crypto is no longer viewed as a digital currency. It is tracked, traded, and evaluated as a digital asset class. Cryptocurrency is different from traditional asset classes in many ways. They are borderless, traded 24/7, and provide decent liquidity in most market scenarios. They are different from traditional fiat currencies as well. Sovereign central bank backing, monetary controls, tighter liquidity conditions, these all benefits crypto doesn't provide. That's why they remain highly volatile, highly uncertain, and as a result, today they function more like a speculative asset class as compared to a medium of exchange. In India, crypto trading formally opened in 2020. Many restrictions, many regulations came in. Finally, here we are with 30% tax on profits, 1% TDS on large transactions, and mandatory KYC requirements. Despite all these restrictions, transaction value crossed 51,000 crores in financial year 2024-25, a 41% increase year on year. Over the past 3 financial years, exchanges have collectively deducted 1,100 crores as TDS. Now, initially, these measures have slowed participation, but more recently, patterns have changed. Some high net worth individuals, family offices now view crypto as an experimental asset class. They've started allocating smaller periodic amounts as their tactical asset allocation versus core allocation. Data from July shows increase in the activity. CoinDCX volume have increased by more than 30% after the crypto week, reaching to 10 million. Mudrex also reported a 25 to 30% increase in the volume. Between Jan and June 2025, some 3,500 Ultra HNI families traded more than 50 lakhs monthly, contributing close to 50% of CoinDCX volume. Bitcoin's performance this year reflected a global risk sentiment. Bitcoin price surged to almost $126,000, riding a wave of optimism sparked by Trump administration's pro-crypto agenda. Spot Bitcoin ETF saw billion-dollar inflows, reinforcing the Bitcoin's role as a perceived safe haven amid trade tensions. But this rally was faded out in October and November, when the Bitcoin prices fell by almost 20 to 30%, bringing down back to the current levels of $90,000. Due to Indian regulatory constraints, many investors can't access the global crypto platforms. They usually convert INR into USDT before accessing the global markets. This process introduces price differences due to demand, liquidity constraints, and FEMA-related restrictions. In July 2025, CoinDCX saw a security breach amounting to 44 million. None of the customers' funds were touched. The entire loss was absorbed by the exchange. By October 2025, Coinbase announced an investment in CoinDCX at a valuation of 2.45 billion. In contrast, WazirX, another exchange, faced 230 million of cyber attack in July 2024, leading to operational shutdown. Due to regulatory constraints, trading resumed back in October 2025. These events underlying operational risk in crypto markets and varied outcomes faced by exchanges during recovery. Crypto participation varies widely. Some investors view it as a high-risk investment. Some investors view it as an experimental asset class. Some see it as a tactical asset allocation for their portfolio. Outcomes will depend on their risk tolerance, their return expectations, their time horizon, and the regulatory clarity. At Centricity, our role isn't to promote or dismiss any asset class. It is to help investors understand risk, context, and align it with their long-term goals. Because informed decisions begin with clarity, not conviction. Clarity, context, centricity.